Car payments just hit a 32-year record for missed payments. Worst in 32 years. That's not a clickbait headline, that's what Fitch Ratings, the same company that grades trillion-dollar bonds, just confirmed with their own numbers. If you've got a car payment right now and you're feeling that tight squeeze in your chest every time the due date rolls around, you are not alone, and you are not bad with money. Something bigger is going on, and in the next 10 minutes, I'm going to show you exactly what it is, who it's hitting hardest, and the free steps, no lawyer, no accountant, not a dollar spent, that you can take this week to make sure you're not the next name on that record. I'm Vane, and let's get into it. So here's the headline everyone's talking about. Fitch Ratings tracks something called the 60-plus day delinquency rate. In plain English, that's the percentage of people who are 2 months or more behind on their car payment. Look right here on screen, this is Auto Finance News, reporting Fitch's own number for December 2025. 6.74% of subprime auto borrowers were 60-plus days behind. The headline itself calls that a 32-year high, the worst December, since this kind of tracking began in 1994. And it got worse from there. Here on screen is the very next month, January 2026, analyzed from Fitch's data. The rate climbed even further, and this write-up calls it a 385-month record high. Do the math. 385 months takes you all the way back to January 1994. So 2 months in a row, this number broke a 32-year record, and it kept climbing. Now, before you panic, this is mostly hitting one group hard, people with lower credit scores, called subprime borrowers. The data shows prime borrowers' good credit are still doing fine, delinquency under 1%. So this isn't every driver in America. But if your credit score is in the 600s or below, or you've taken a longer loan to keep payments low, you're sitting in the danger zone. Keep watching, because the second half of this video is built for you. Here's the part nobody's explaining clearly. This isn't because people suddenly got irresponsible, it's math. Simple, brutal math. Look at this on screen. This is Experian's own official report. It says the average new car payment went from $748 to $770 a month in just 1 year by the first quarter of 2026. Add that on top of rent that went up, groceries that went up, and credit card balances a lot of families are already carrying, and there's no room left in the budget when one bad week happens. A car repair, a smaller paycheck, a medical bill, and suddenly you're late. And all of this is piling up on top of a record $1.68 trillion in total auto loan debt across the country right now, according to Federal Reserve data. That's not a typo trillion, with a T. Here's the trap a lot of dealerships push people into, stretching loans out to 7 or 8 years, 84 months, just to make the monthly number look smaller. That feels like relief at the signing table, but it means you're underwater on that car owing more than it's worth for years longer than you should be. If your income takes any hit during that stretch, you've got way less room to fix it. So this isn't a you problem. It's a structural affordability problem hitting millions of households at once, which is exactly why it's showing up as a record-breaking statistic and not just a few unlucky stories. Let's talk about what's actually at stake, because I don't want to scare you without explaining it clearly. This is straight from the Consumer Financial Protection Bureau, the federal agency, CFPB, that regulates lenders. Right here on the official page, it explains that once you're 60 days behind, your lender can start the repossession process. In most states, they don't need a court order and don't have to warn you. First, they can come take the car. After it's sold, if it sells for less than you owe, you still owe the difference. That's called a deficiency balance, and the lender can send it to a debt collector. But in this matters, repossession rules are not the same everywhere. Some states give you the right to cure the loan, meaning you can pay the past due amount plus fees and get your car back before it's sold, and some require advance notice before they can even take it. That protection depends entirely on your state, so before you're ever in this situation, take 2 minutes and search your state auto loan reinstatement rights so you know exactly where you stand. Don't assume the rule you heard about applies where you live. One more group that needs to hear this directly. If you're active duty military, the screen right now shows the Service Members Civil Relief Act, the SCRA. It says lenders cannot repossess your vehicle without a court order if you took out that loan before you went into service. That's a real federal protection, and if anyone tries to skip that step, your base's legal assistance office can step in for free. Okay, here's the part I promised you. What can you actually do for free, starting today if you're worried about falling behind? Step 1. Call your lender before you miss a payment, not after. This is straight from the CFPB's own page, updated just this June. It plainly states that lenders would rather work with you than repossess the car, because repossession actually costs them money too. Once you call, ask about these 3 things by name. A payment extension. They push your missed payment to the back of the loan. Just know it adds extra interest, so it's a short-term tool, not a long-term fix. A due date change. If your payment is due before your paycheck hits your account, this alone can solve the problem. Refinancing. If your credit has improved since you got the loan, a new lender might offer a lower rate or a lower payment. None of these cost a dime to ask about. The call itself is the free fix. Step 2. If the lender won't help or does something that breaks the rules. This is the CFPB's official complaint page. You file it directly with the federal government completely free. No lawyer needed. You explain what happened, and by law, the company generally has to respond within 15 days. This single page has gotten people their cars back, gotten wrongful repossessions reversed, and gotten fees waived. Bookmark it before you ever need it. Step 3. Know your state's rules before you're in crisis. A quick search for your state attorney general's Consumer Protection Office will tell you exactly how repossession works where you live, whether you get a warning, whether you can cure the loan, and what happens to personal items left in the car. So let's bring this back to you. The headline is Scary Worst in 32 Years, but the reason it's happening isn't a personal failure, it's a national affordability squeeze hitting millions of households at once. And the fix isn't complicated or expensive. It's one phone call, made early, and one government page bookmarked just in case. If this helped you make sense of what's actually going on with your car payment, hit subscribe. I break down exactly what's happening with your money in plain English every single week. And if you know someone stressing over their car payment right now, send them this video. It might be the one call that saves their car.